Ayo Trade. This is Don Kaufman. June 2nd, 2021, minutes after the cash close here on this Wednesday afternoon. Hey, it's a shortened holiday week of trade. Absolute slop fest in the marketplace. Nevertheless, AMC is just gamma gone wild. We're going to look at that here momentarily. One of the things I like to do, kind of halfway through the week, and this is, again, it's a shortened holiday week, but we love to look at the SPX and the expected move. And one of the things that's a real standout, again, we're going to cover AMC here momentarily, but one of the things that's just a real standout, what have we done over the last two trading sessions? Absolutely nothing. But with that, we're looking at like a $50 expected move. That means we're looking to move $50 higher or $50 lower on the week. And I got to tell you, you cannot discount these expected moves. There's an incredibly high probability week in and week out that we tag the upper and or lower edge of the expected move. And the reason I want to always kind of harp on this. I mean, that upper edge of the expected move is, 42.55. The lower edge of the expected move is 41.54. Pay attention to those levels. I'm going to say that again. Pay attention to those levels, because even though there's nothing discernible, people are going to read into this today and be like, well, Tesla was down. Yeah, Tesla was down, but you know what? Apple and Amazon offset the losses in Tesla. Other than that, there's nothing to read into. I mean, the volume was fairly light inside of the S&Ps. The bonds actually, and I know what? The bonds, they actually ticked up, which is surprising because bonds ticking up takes interest rates down just a little bit, but didn't really impede upon the financials, the monsters of tech, net, absolutely nothing. And that's, again, it's a big slop fest of trade over here. But you have to also kind of rationalize. You look down to the bottom of the screen, the VVIX, the little VVIX, the volatility index, still sitting at what? The 112 arena. Like, that's serious, put on your big boy pants out there. We're still at a very serious volatility, the volatility index. Skew, skew is literally a day removed from an absolute, record high in here. So people, this marketplace, say what you will. It's boring. It's summer trade. It's this, it's that. Okay. It's a slop fest. Yeah. Hey, even I call it a slop fest. But I'm telling you right now, it's ready to rock, and you need to keep your helmet on, okay? Because I do not believe that this is a summer that the market is going to go quietly off into the night. Now, with that, let's bring you a little bit about AMC and Gamma's Gone Wild. I think this is actually a pretty cool trade to discuss today. And I know everybody in the industry is talking about AMC, but I'm going to give you a slightly different variation of that. First and foremost, yes. Okay, that is 4.6 million option contracts have traded in there today. That's ridiculous. You want to see the other really ridiculous thing? And by the way, this just gets me going. Look, you have traded at the bid or below, or traded at the ask or above. Okay, now neither here nor there. So there's 830,000 contracts, 730,000 contracts, yada yada. But then you look at the puts. There's another. It's good. Another almost 600,000. Another 600,000. What do you have over here? You add it up. You're almost at 3 million of the contracts that traded today. That's 3 million almost of about the 4.6 million traded at the marketplace. Now, wait, what does that mean? I traded at the marketplace. Well, let's actually explain exactly what that means. Here's a marketplace. I know the market's closed right now, but let's actually kind of explain. Okay, here's a marketplace. It's $11. This is $10.55. So you have a marketplace. It's basically 45 cents wide. Do you realize that over almost 3 million contracts traded, somebody just goes, I'll buy it. It's like walking into a used car dealership. I'll take it. You paid them $11 for that? Was that like a market order? Okay. Anybody that survives in this business doesn't do that. You cannot survive in the business just hitting the bid, taking the offer. You can't do it. Okay. All you're doing is basically feeding firms like Citadel. Citadel's the market making firm, and they're killing it out there. And I know, it's why I kind of call this Gamma's Gone Wild. The only one that wins when you're trading, okay, at the bid or below or the ask or above, the only one that really wins is the market making firm. Okay. In the end, this is not going to work well for retail clients. Now, why does the stock explode to the upside? Of course, everybody in the industry is saying the CEO came out and he goes, I get free popcorn. I get free popcorn if I'm an investor in AMC. Neither here nor there. That's, that some of the news actually sparked a lot of, sentiment around it. And everybody was talking about it around the water cooler. Do you do that these days? The water cooler, is that allowed? Right? Is that quarantine approved? Probably not. Nevertheless, let me actually explain what occurs in here. So you're sitting at home and you're a retail client, right? Let's go ahead and close up this left sidebar and actually really draw this out. So you're sitting at home and you're a retail trader, and you realize you're going to go out and you're going to buy. You're going to buy, okay, some 40 calls. So you're going to buy the 40 calls. Doesn't matter what you pay for them, right? And you did that early on in today. So there's the 40 calls, and you bought them right in here where they were the at the money options. And at the money option, okay, when you buy calls, you're going to produce what's called positive delta. You're buying calls, you're producing positive delta. That means you're bullish, right? How many calls did you buy? You bought a 10 lot of them. So you're going to buy 10 of the 40 calls. How many deltas are going to be? Well, if it's an at the money options typically have what? This would be like a 0.50 delta. So for the most part, you just bought yourself a lovely 500 AMC deltas. Now, when you bought the calls, who sold them to you? Market maker. So here's the MM, the market maker. They sold you those calls. So they sell you, okay, the 40 calls. And they sell you the 40 calls. That actually implies that they're going to be negative delta. How much negative delta are they going to have? They're going to be negative 500 deltas. But the market making firm typically goes delta neutral. All right. So what do they do? To offset the negative delta, they go out and they're going to buy. What are they going to buy? They're going to buy, all right, 500 shares of AMC. So they're going to buy 500 shares. Why? Because they just neutralized their equation, right? So they were actually short 500 deltas. Now they're long, 500 deltas. What are they? They are massively unchanged. But the second that the market making firm starts to turn around and starts to do what? To buy some shares, what does it do? Actually drives share value higher. So as they're buying shares, you know what happens? Okay, the option, okay, that you initially bought, that was a 50 delta, goes deeper in the money. Now the option jumps to a 60 delta. So now you're no longer 500 deltas. Now you're what? 600 deltas. Irony of the market making firm. The market making firm, their calls are no longer than what? Negative 500 delta. Now they're negative 600 delta as well, which actually implies that they have to go out there and they're going to have to buy another 100 shares of stock, which just drives the stock up further. And when the stock goes up further, they're probably going to have to buy another 100 shares of stock, which then, somebody else comes out and they start buying now. Now you're going to buy, for instance, the 50 calls, and some other trader buys the 50 calls, and it actually just spirals out of control. And this is actually what I term, it's gamma's gone wild. This is the dynamic that actually drives markets to do this, not just free popcorn, people. As exciting as that sounds, it's to understand this dynamic. This is about market making, okay? And this is about the use of options. Options are the cart leading the horse. So what you in effect had today is, yes, you had almost 5 million option contracts trading there. Look at the number of shares, 755 million shares traded. You know what the irony of that is? A ton of those shares, almost all of them, are probably used to hedge off, okay, the risk of the options. So this is what, again, it's kind of market making 101 to understand that it's this wild gamma driven trade, and it's in a gamma squeeze. It's gamma gone wild, generated by the fact that you have, roughly 4.6 million option contracts trading in there. Again, last but not least, we go back to the S&Ps. Again, expect some volatility coming into Thursday or Friday of this holiday week. Say what you will about the marketplace, call it a slop fest, call it whatever you want. There is volatility packed into this marketplace outside of something like AMC. Thanks everybody for joining us here at Theo Trade. Have a wonderful evening. Bye-bye.